Good evening and welcome to Money Matters. The largest initial public offering ever will soon list in Shanghai and Hong Kong. Alibaba affiliate Ant Group is at the cutting edge of the fintech revolution, and investors are eager to pile in. Douglas George reports the company has faced a few hurdles along the way.
Ant Group will reportedly list shares on the infant tech-focused Star Board in Shanghai and in Hong Kong. The share sale will be the largest ever, surpassing the $29 billion share sale by Saudi oil giant Aramco. The online payments and lending company has generated great excitement with its desire to list. Is it all hype, or is it a high point in finance?
This is the future of banking. Yeah, I think in the future, the biggest financial institution may be Ant Group. You're not talking about Citibank or China Construction Bank or Goldman Sachs whatsoever. You're talking about Ant Group. You started at the smallest level and then you expand exponentially to infinity. That's what the Ant Group provides an opportunity for you. So I think that is the future of banking.
In a nutshell, the company is a payment system giant that is looking to expand into all the nooks and crannies of financial services. It reportedly will sell $35 billion worth of shares, the biggest ever stock listing, giving it an estimated $250 billion valuation, which would make it bigger than the Bank of America. Analysts say expected to list at the top of the yet-to-be-confirmed share price range.
Investors would like to give them some premium for the PE and also the whole valuation, because the market expects that they can generate a high growth profits and also the revenue. And they have a very innovative ideas to create some new business and to expand their original business. So that I do agree that this valuation is quite attractive. And I do believe that the valuation could go up further after going listing.
There was some talk of the dual listing heating up the rivalry between these two financial hubs. The company reportedly is seeking the foreign exchange of international investors in Hong Kong and the mega valuations on the Star Board, making the proportion of the share split a hot topic.
It will be listed in both the Hong Kong exchange and also the Shanghai Star Board markets, equally splitting the share flows between these two markets.
There's no official announcement as to how they're going to split between the Shanghai and Hong Kong exchange. So it's possible that it's a 50-50 split. But according to the Asia prospectus, there are only 48 billion Chinese yuan to be listed in the Shanghai Stock Exchange.
If that pans out, it would place about $8 billion, or 22% of the shares, on the mainland exchange, with the rest in Hong Kong. Ant's bread-and-butter business is in Alipay, which, with rival WeChat Pay, dominates electronic commerce on the mainland. But payments by itself doesn't generate a high proportion of the company's profit. Its consumer lending business is the money spinner. Using its online financial platform, Ant originates demand from retail consumers and small businesses, passes that on to about 100 banks for underwriting. It earns fees from the lenders and puts its own balance sheet at minimum risk. Ant's consumer lending balance was $254 billion as of the end of June. That's 21% of all short-term consumer loans issued by Chinese deposit-taking financial institutions. It is this sort of dominance that has investors rushing into the IPO.
They take money from you and then they lend money to these individual borrowers at high interest rate. It's like those credit card borrowing. I think that's where you can charge maybe 20%. You get your deposit at maybe 1 or 2% interest rate, and you charge your borrower 20%. So you make enormous amounts of money.
The Hong Kong exchange finds itself benefiting from the tensions that have built up between Washington and Beijing, and could have sought a listing in the U.S. like its sister company, Alibaba, but politics increasingly got in the way.
the U.S. does not want China to dominate the future financial world, because this is where the U.S. has an advantage over China.
Is that the reason they've opted to come to Hong Kong instead of a U.S. listing?
Yeah, definitely. I think the U.S. is too hostile.
If the Trump administration continues, will they introduce some more tightening policies to punish these Chinese companies? So I think the Ant Financial and their management would like to avoid this risk, so they hope can list before the election.
Chan says it's also chasing the extraordinary prices in the market these days.
The main reason behind this is they can see the market is going up quite crazily this year. And the valuation on these new economy companies or the tech stocks already in a very high level. So the Ant Financial would like to enjoy a higher premium, a higher valuation. So they hope can go listing as soon as possible.
Still, Ant's dash to list in Hong Kong and Shanghai keeps hitting other roadblocks. First, the White House stepped up backroom efforts to restrict Chinese payment systems like Alipay and WeChat Pay, citing national security concerns. The Americans don't like the idea of these Chinese companies collecting terabytes of financial information on its citizens, and what impact its business model will have on the financial system. This directly threatens the company's expansion plans in the U.S. market, where it only has a tiny foothold in mostly luxury retailers. Then, Senator Marco Rubio floated the idea that American investment banks involved in the deal should be prevented from doing so. Even the Chinese side got some digs in. The Chinese securities regulator is also probing a potential conflict of interest in the listing. China Securities Regulatory Commission looked at Alipay's role as the only channel that retail investors can use to buy into 5 mutual funds that are the only channels to invest in the IPO. The arrangement is odd in that it cuts out traditional brokers and banks.
If looking into the longer term, there are also other financial regulatory concerns, including the LPR caps, the quadruple LPR caps on lendings provided by unlicensed financial institutions.
It is still not clear if any of Ant's lenders are subject to this new capping scheme. In the end, mainland regulators gave the green light for the listing, and Hong Kong's exchange approved it too. China stepped up its economic recovery in the third quarter from the coronavirus shock, but missed forecasts. China's National Bureau of Statistics pointed to continued challenges for one of the few drivers of global growth this year. Gross domestic product grew 4.9% in July-September from a year earlier, slower than the median 5.2% forecast by analysts. It follows a 3.2% expansion in the second quarter. The Bureau says Chinese economic indicators are providing a good reason to believe a sustained recovery is underway, but added the economy will continue to face external uncertainties in the fourth quarter. COVID hit Cathay Pacific Airways will slash 5,900 jobs and end its regional Cathay Dragon brand, once known as Dragon Air, which operated routes to and from mainland China. The airline says it would also seek changes in conditions in its contracts with cabin crew and pilots as part of a restructuring plan that would cost the company $2.2 billion. Overall, it will cut 8,500 positions, or 24% of its normal headcount, including 2,600 unfilled positions.
This is a period of extreme anxiety and distress for many of our people, several thousand of our people and their families, and it is, absolutely the focus of management today and in the coming days to complete the communications, the thousands of difficult conversations that need to take place as swiftly and compassionately as possible, and to provide all the support we possibly can.
After receiving a $40 billion rescue package led by the Hong Kong government in June, the airline had been conducting a strategic review. The carrier has been bleeding $2 billion of cash a month amid the pandemic slowdown. Airlines hate to hear words like plunged or plummet or worse, crash, but United Airlines' financial performance reflected all three over the summer as a modest recovery slowed. The company reported a loss of $1.8 billion in the normally lucrative third quarter. The airline says revenue dropped 78% from a year earlier. The loss was worse than analysts expected. The results reinforce the damage the pandemic is doing to the industry. 7 months into the worst of the coronavirus impact, air travel remains down 65% from a year ago. The decline in business travel is even deeper. United's rival Continental also reported steep losses.
Coming up after the break, Money Matters goes on a flat hunt, this time in a renter's market with tons of value for money. Stay with us. Welcome back to Money Matters. Residential rents have dropped 9% on average in just the past month. The renters market has strengthened as the economy has slipped further into the doldrums. Alice Kahn reports some landlords in older low-rise buildings in Sheungwan and mid-levels are cutting rents by as much as 20% to attract tenants and creating lots of value for money for would-be renters. These low-rise buildings are in some of the quietest areas of mid-levels and Sheungwan. Single expats like the vibe of the area. Rent for a one-bedroom flat can go as high as $30,000 a month. American Robin Smith has been working in public relations for 7 years. Her clients are mainly in the food and beverage industry, which have been badly hit by the protests and the coronavirus pandemic. Robin is living in a small unit in Happy Valley, paying $27,000 a month, which she thinks is too high. She's looking for a cheaper one-bedroom flat in mid-levels.
After this past year of uncertainty in the market and with earnings and things like that, I think everyone's a little bit more price conscious and wanting to cut back on fixed expenses.
The lease coming up for renewal, it seems to make sense to look around and to see what else is available.
In the past year, rents have dropped 9% on average. Analyst Vincent Chung says it's now a tenant's market.
Tenants has a bigger bargaining power compared to the landlord. There are quite a lot of new supply, and amid of the sluggish economy, a lot of new supply. For the second half of 2020, there are about 11,000 new flats launched in the market. So you can expect that in terms of the supply, that's quite sufficient. The landlord will compete with each other, and they are more willing to cut down the rent and then to attract the tenants.
Robin prefers living in a quiet area, so we're here to help her find a flat that delivers value and peace just off of a busy road on Hong Kong Island. The first flat we visit is a unit in this 24-year-old building on Mosque Junction near Robinson Road. It's a 354-square-foot one-bedroom unit. There's an open kitchen with kitchenware, an oven, dishwasher, gas stove, and fridge. This wardrobe divides the living room and the bedroom.
So it's ideal for someone who is new to Hong Kong and they don't want to bother with anything, so they can literally just move in and not have to buy any furniture or anything. It is even equipped with all the kitchen glassware and pots and pans and bedding for the bedroom.
Although the internal area is 354 square feet, it has 2 terraces, which add almost 200 square feet to the living space.
You have these bifold doors that push right back, so this extends your living space quite significantly. You can see it's actually around an extra 100 square feet.
Sonia, there's another terrace at the back here.
Yes, that's right. So you've got at least another 100 square feet back here. There's a washing machine, actually a washer dryer built in there. And here we have a barbecue. And then also, if you continue around here, we've actually got a jacuzzi. So hot tub. The last tenant used it quite a lot in the winter, actually.
The 2 terraces allow lots of natural light into the flat. The drawback is that the view is of old buildings opposite, meaning less privacy. The landlord's target tenant is an expat. His asking price is $28,000, but the flat has been vacant for 2 months, so he's willing to go down to $26,000.
Usually it gets let within a month. So having this 2-month gap is very unusual. There is, yes, because there's not as many new tenants coming into Hong Kong, obviously. So we have seen a much smaller tenant pool this year. Also, tenants know that there are choices out there for them.
The building doesn't have a lift or other facilities. In terms of amenities, there are restaurants and shops nearby, as well as the escalator, which provides easy access to Central. Bus services are also available on Robinson Road. Our next stop is a unit in this 34-year-old low-rise building in Sheung Wan. It's located on a quiet street. The net size of this unfurnished flat is 385 square feet with 1 bedroom. Initially, the landlord slashed the rent from $28,000 to $25,000. Now he's willing to reduce it further to $23,500. The landlord is a designer. He renovated the unit once the last tenant moved out. Because the flat has small windows, he changed the wooden door to a glass one to allow more natural light into the flat. The 60-square-foot bedroom can easily fit a queen-sized bed. To maximize the space, the landlord installed a bookshelf to separate the bedroom from the living room. A big wardrobe also provides lots of storage space. He also renovated the kitchen, providing some appliances for a tenant. The drawbacks? The view is of a school across the street and there is no lift, just lots of stairs and no amenities. Plus, it's far from an MTR station.
You probably wouldn't get families because with the stairs, because it's a walk up, so not really so suitable for families with children. And also the size as well. I mean, they tend to be more appealing to singles or couples.
Robin looked at the flat on Mosque Junction and the one in Sheung Wan.
Big wardrobe. It is a big wardrobe. I wonder. Yeah, it's really deep. I like that there's built-in drawers.
This is the living room.
It's quite small, but it's nicely done.
Look at this.
Oh, that's nice. It's nice that you can get a little more light in.
After viewing the 2 units, which one does Robin prefer? Robin finds the flat with 2 terraces is appealing because she loves open space, but she prefers the unit in Sheung Wan.
I have my own furniture, and I prefer having somewhere that I can customize to my own style a little bit more.
I don't prefer a place that's furnished because I do have a small dog, and so just the concern with furnishings.
Now, the main issue is the price. She thinks the rent of the Mosque Junction flat isn't low enough.
I think it's a little high priced for the market right now for this flat, but at 23 and a half, I think that's quite a good deal. That's come down a lot, and I think it shows a willingness and a flexibility with the market. So I'd probably choose this flat.
I also want to save some money just to also just have a cushion just in case.
The size of the actual flat is maximized by, it's very well designed and there's a lot of storage. I think there's a lot of storage in the bathroom, things for your towels, for sheets and linens.
Property agent Vincent Chung says residential rents will continue to come down.
You can see that unemployment rate is up to almost 7%. So you can see that the employment market is not very satisfactory. And in the meantime, even for the people, they do have a job, but they may have the pay cut. So you can expect to more and more tenants will ask for a discount on the rental.
Road rage? How about a courtside crash? Russian Daniil Medvedev lost twice in St. Petersburg. The match, and then losing in front of the hometown fans wasn't to Daniil's liking. Then he approached his American opponent. Phew.
6, 7, 5, 6.
Love means nothing on the tennis course. These sizzling morsels are contributing to climate change, so the stakes are high. Activists marking World Food Day are saying G20 countries are going to have to drastically alter their diets if the world wants to feed itself and reduce climate change. Too many of us are tucking into a chunky steak and not enough are eating vegetables. The clever pandas over at the WWF say they don't want us to stop eating meat, just less, and choose more plant-based food. Dubbed the planet-based diet for all the good it would do, like cut wildlife loss by 46%, cut agricultural land use by 41%, and spoil your appetite even more. As a man once said, peas should be carefully washed, lovingly blanched, salted, and still thrown away. Brent Loken, and man who failed as a meat substitute, says they don't want us to be vegetarian or even vegan. That'd be a mistake. But a diet change is a must if we want to reduce the negative impact of our food on the planet and our figures. Give up meat, eat more veg, no more bacon, more beans? Can we just lower global temperatures by switching from Fahrenheit to Celsius? A group of mainland seniors have become an internet sensation after nursing home staff posted their videos recreating famous oil paintings. The seniors, who range in age from 73 to 92 years old, live in Shanghai. The nursing home staff often arrange fun events because growing old is inevitable. Growing up is optional. Staff and residents eagerly set about obtaining the perfect props, outfits, and makeup to make the project a success. Mr. Zhuang, 91, found himself typecast as the 5-year-old boy eating an apple. Zhuang, seen here showing the size of apple he really wanted, explained, "Many told me that I resembled the apple-eating boy. I didn't disagree because I wanted to keep the apple for a snack later. Oh, and the hat." The videos and pictures soon went viral, for which face masks were not required after they were posted on the Chinese version of TikTok. When told that netizens praised the senior model's confidence and optimism, the models asked, "What are netizens?"
That's our show. Thanks for joining us. Next week on Money Matters, the autumn auction season has arrived and connoisseurs are still buying their favorite pieces. But have prices flattened out amid the pandemic? Join us then to find out. Good night.